So we've got all of this evidence, Pat, that gold is in a bull era. So what? So what?
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome, everybody, to another episode of Talking Trade. Of course, you have Kevin Wadsworth and myself, Patrick Karim. And today, Kevin will talk to you about gold. Gold's bull era. So what? Right, Kevin?
Yeah, exactly. So what? Who cares? How do we define a gold bull era? What does it mean? Why does it matter? Because if you're not invested in gold, then who cares if gold is in a bull era? Well, you should care, because if you're invested in the stock market, if you're invested in commodities, if you're invested in a 401k, if you're invested in tech stocks, if you're invested in cryptocurrencies, then gold being in a bull era has a massive set of implications that you need to be aware of. What do I mean by that? Well, I'll just give you a little taste of what I mean by that with a run through some charts here, and it might sort of make you sit up and take notice that gold being a bull era isn't just about the fact that gold is going up in US dollar terms. So there are a number of charts that help us to define a gold bull era, and I'm just going to run through some of them. So here we've got the US money supply, United States M2 money supply versus gold. And one of the things that happens in a gold bull era, as opposed to just a gold bull market, a gold bull era is defined when this chart breaks downwards through support, through the moving average, and through the Ichimoku cloud. It happened way back up here in 2002, the early 2000s. You can see we topped out where I've got the red circle there, but we actually broke down below the moving average and below the Ichimoku cloud and below the support line in this area here. And the chart plummeted. And what happened to the price of gold? Well, I'll tell you what happened. It went from $250 to nearly $2,000. So gold went up by over 700%. Okay, that's great if you're in gold, but it also has other implications. Then after that, when the gold bull market peaked in 2011, the chart started to go up. Money supply started to outperform gold. And that led to gold bottoming. Well, of course, we saw gold around about $1,050, $1,100, but gold bottomed here at the top of this ratio chart at around about $1,600. And since it started to turn down, and since it broke down, gold has risen around $2,500 so far. So we were able to say when the chart broke down there that we were entering, or this was a piece of evidence that we were entering another gold bull era. The US dollar index versus gold is an interesting one as well, because it helps us with the identification of a gold bull era. When it breaks down, again, DXY breaking down versus gold means that the US dollar relative strength is being outperformed by gold. And that's what happens during a gold bull era. It happened back here in the 1970s. Gold went up by many, many hundreds of percent, over 1,000%. And it also happened here in the period between 2000 and 2011, when gold, again, as I said, rose 700% or more. So this chart breaking down leads us to another piece of evidence that we're entering a gold bull era. And what's happened? The chart's broken down. Gold versus CPI breaking out to the upside is highlighted by the yellow shaded areas here. And these yellow shaded areas occurred in the 1970s and the early 2000s. What's just happened? We've just broken out through a major resistance line, a paradigm shift breakout line, and that is another piece of evidence that gold is in a bull era. Gold versus PPI, you can do that as well instead of CPI if you want to, and you can see that gold versus PPI, got it on the candle chart there, or the line chart, is or has broken out and is moving very strongly to the upside. Currency in circulation versus gold, when it breaks down, you get a gold bull era. And what's just happened? Currency in circulation has broken below the moving average, below the Ichimoku cloud, below the support line, much as it's done previously, breaking through key support levels where you find the Ichimoku cloud and the moving average there. So another piece of evidence in favor of a gold bull era. The equal weighted S&P priced in gold. We've shown you this one before, and it is also moving down strongly. So the equal weighted S&P is underperforming gold. You can see gold versus the New York Composite Index. Very interesting point here. Actually, I was going to post this on social media if we get a monthly breakout, but we're very, very close to a major breakout line there on gold versus the New York Composite. We've looked many times at the Dow versus gold ratio breaking down, much as it did back in 2001, 2002. Major breakdown taking place here. So another piece of evidence. And so you get, this continues. You can look at the NASDAQ versus gold breaking down. Gold versus the S&P, which is perhaps one of the key pieces of the puzzle. Gold versus the S&P is now breaking noticeably to the upside, which is what it did back in the period around 2001, 2002. So we've got all of this evidence, Pat, that gold is in a bull era. So what? So what? Okay, this is the point of this discussion. We've shown this evidence before. I'll tell you so what. Here we go. Look, so, right, this is communication services versus gold. So if gold is in a bull era, this is what it means. Communication services are plummeting versus gold. These are all sectors of the S&P that your average Joe has got his pension funds invested in. Okay, so if you've got your 401k or your pension funds invested in these sectors, you are losing out massively compared to gold. Consumer discretionary sector in the S&P plummeting versus gold. Look at consumer staples in a disastrous bear market priced in gold plummeting. We've got XLE. XLE is energy. Now, energy at some point we expect to start to do well. So this is one chart that at some point in the gold bull era can actually do pretty well. But at the moment, it's plummeting versus gold. What do we got here? We've got XLF, which is financials versus gold. And the capital rotation process here is pushing this chart below the support line, below the moving average, below the Ichimoku cloud. So if you're invested in financials, going all the way back 25 years to the year 2000, massively underperforming gold. How much does it underperform gold? Let's work it out. 86%. So if you've been invested at any point in the last, this century, since the year 2000 in financials, then you're investing in a market that is rolling over and breaking down into a renewed bear market priced in gold. XLV, healthcare, it's in a disastrous bear market versus gold. It's plummeting, having made a very clear topping pattern. We've got XLI, I think that is there. Industrials, yes, XLI industrials, broken down. It's in a bear market. If you're invested in any of these sectors, you are onto a loser. Materials versus gold, losing. XLRE, real estate, what a disaster. Look how much that's fallen. Absolute disaster for the last decade or more, probably, has trended down and down and down and down versus gold. We've got XLK, which is the one sector of the stock market that has been trying to hold up priced in gold. It's technology. And even technology has broken down below the 4-year moving average, below the Ichimoku cloud, and it doesn't look particularly great at the moment. And also, it is a long way below where it was 25 years ago, priced in gold. Technology has fallen something like 66% or more. Actually, I just need to bring that down a little bit further, don't I? So 67, 68% technology has fallen versus gold since the start of the century, since it peaked. So despite the bull market run, technology is still down 66% priced in gold. And we've got the final one here, which is utilities priced in gold. It's just gone from top left to bottom right and has fallen over 80%, 83%, despite the recent rally that everybody points to and says, oh, the stock market's had a brilliant rally. It's been in a bull market for years and years and years. Well, not priced in gold, it hasn't. Priced in gold, utilities and many of these other sectors ended their bull markets years ago. 2019 utilities have been in a bear market priced in gold ever since then, or at least, if not a bear market, have been in a downward trend since 2019, and they have more recently entered a bear market priced in gold. So gold being in a bull era is a bit more of a big deal than some people might believe, because it means that you are not on the fastest horse, you're not making the most of your capital. And the final part of this, and the clincher of this, is that historically speaking, when all of these charts break down priced in gold, we know what the next step is. The stock market itself breaking down priced in US dollars. This is all showing underlying weakness, and it's showing you that you could have made a lot more money if you just had your money sitting in gold or silver or related assets. But it is a big warning sign for what may be coming next that we should not dismiss, Pat.
You have been warned, all right, guys? And this is not just warning to scare you. This is chart-defined evidence. Bear markets across the board, sneaky bear markets for practically all asset classes priced in gold, and also maybe like silver and other commodities. All right, guys, make sure to like, subscribe to get more useful information like this. Thanks.